What up, crypto warriors? It's Sergeant Crypto back at it again. Today is Monday, January 13th, 2020. I have 3 stories I'm going to cover today. But first, let's get into this crypto market. We have a market cap of 212 billion, 24-hour volume of 17.8 billion, liquidity at 650 million, and Bitcoin dominance at 69%. The price per Bitcoin is a little over 8,000, and I don't want anyone to think that they're late. You know, if you're new to this crypto game and you think, oh man, I missed out on Bitcoin, I missed out on that 9 million% over the past 10 years, you're not too late. And here's why. Boom. A $23.1 trillion US debt and counting. And here it is. We are still so early. This is all the money in the world. All the money in the world, that includes real estate, derivatives, freaking gold, all precious metals, stocks and bonds, everything. When you think about it, with over $1 quadrillion worldwide of investments and money available, this measly little $212 billion still have a ton of room to grow. And when you're talking about Bitcoin in particular, where it's $147 billion in market cap, and you have gold sitting at roughly $7 trillion in market cap, there's a ton of room to grow, basically is all I'm saying. So don't feel like you've missed out on it. Again, this is not financial advice, just my opinion. So let's get into it. This is coming out of the Daily Hodl. Global investment giant PIMCO says central banks running out of firepower to beat next recession. So what are they talking about here? They're talking about this, not QE, the printing of the money. Basically, the central banks just printing money to save banks within their borders, right? So here it is. This is coming from Joachim Fels. I definitely butchered his name. He's an economic advisor over at PIMCO. Whenever the next economic downturn or major risk market drawdown hits, policymakers will have even less policy capacity to maneuver, thus limiting their ability to fight future recessionary forces. Financial problems and uncertainty throughout 2019 were attributed to trade war tensions between the U.S. and China, prompting the U.S. Federal Reserve and the European Central Bank and other major reserve banks to slash interest rates or take part in asset purchases to reduce the adverse effects of a potential global economic crisis. So what does that all mean? What we have is these central banks printing money, and the people closest to the printers, the other banks, the other bankers, the big businesses, they're so close to the money that as they get the money fresh off the printing press, they're using it to buy back their own stocks, in turn raising their stock prices. You don't have research and development. You don't have them raising the income of or the salaries of their employees or hiring their new employees. What they're doing is just basically making their pockets fatter. So they're buying real estate, they're buying back stocks, and again, just putting that money directly into assets, not investing in the companies themselves. So they're getting the money for cheap because interest rates are dropping lower and lower. In some instances in Europe and even in Asia, we have negative interest rates. So basically the banks are paying them to take out loans. It's a crazy world we live in. Mark Carney, a governor of the Bank of England, right? Basically the central bank of England, his United States counterpart would be the chairman of the Fed, says the global economy is heading towards a liquidity trap, and similarly warns that central banks are running low on maneuvers in a recent interview with Financial Times. It's generally true that there's much less ammunition for all the major central banks than they previously had, and I'm of the opinion that this situation will persist for some time. He adds, if there were to be a deeper downturn that requires more stimulus than a conventional recession, then it's not clear that monetary policy would have sufficient space. So they're backed in a corner here, and they're only digging themselves deeper into this hole. And we have somebody that's in the system saying that, yo, the system is broken. We're digging ourselves into a deeper and deeper trap here. We're backing ourselves into a corner. And this is someone in the system saying that. He even came out sometime, I think maybe in September or August, and stated that we need to transition to a more blockchain based or digital currency type of system. And he was an advocate for all the central banks going to some kind of digital currency type of system and getting off of the US dollar. All right, getting away from the US dollar being the world reserve currency. So again, someone in the system coming out and saying this, hey, people got to pay attention, man. And this is why I'm into crypto, because I know that, Bitcoin, I should say mostly, because Bitcoin is definitely a hedge against the central banks and their printing of money and dropping of interest rates and all these financial instruments that they have to rig the system even more. Next, coming out of CoinDesk, with the new year, Illinois became the latest state to recognize smart contracts and other blockchain-based records as legal instruments. The state's Blockchain Technology Act, sponsored by Representative Keith Wheeler, a Republican, took effect January 1, opening a slew of potential new legal scenarios for blockchain-based contracts. These contracts are now admissible as evidence in court, recognized as a viable alternative to paper-based records, and statutorily exempt from local taxation. The Illinois law extends the same legal recognition already enjoyed by paper contracts to blockchain contracts and agreements, so that they are recognized as legally binding in the eye of the state. It also shields the blockchain industry from local government interference, meaning cities and towns cannot impose taxes and regulations or require licensing or permits on blockchain systems or those who use them. We need that here in New York State, all right? Requiring a license just to do business, like a blockchain-based business. Just I won't even get into it. That stupid bit license. The law ensures that businesses and individual community members will not have to navigate a patchwork of local blockchain regulation, said Alison Mangiero, president of blockchain technology company TQ Tezos, and a proponent of the bill. So there you have it, man. Another state, okay, jumping in and making it easier for businesses to do business and protecting individuals from the overbearing government, so to speak. Taxation of this and licensing of that, and great news. Another state doing the right thing, allowing business to do business, allowing for capitalism to take place, all right, and not hindering or stifling innovation. Next, speaking of adoption, big news. Oh, finally, but not least, we have Spencer Dinwiddie, I almost said New Jersey Nets, Brooklyn Nets star. Spencer Dinwiddie launching digital token next week that discusses NBA threat to terminate his contract. So this was as of January 10th, and the contract his tokens will be available as of today. So here it is. This whole first part talked about, they gave the backstory about him trying to tokenize his contract, and that the NBA, was definitely against it. Again, I'll leave this linked in the description below. But here it is. Dinwiddie is going to sell his securities-backed SD8 tokens, so Spencer Dinwiddie 8, that's his number, which can't be traded for a year, for $150,000 apiece to verified accredited investors under SEC Regulation D, Rule 506C. What he created, he said, allows players to structure and issue debt instruments in digital token form to invest their money how they like. It would function as a decentralization of the personal loan to athlete through bonds they create with their guaranteed contracts as collateral. So more adoption here. We have an NBA star who's using his contract, his guaranteed contract, and tokenizing it and guaranteeing a rate of return of 4.9% interest on a monthly basis. Another incentive that Dinwiddie has for the token holders of the SD8 token is 8 of them will be chosen out of the 90 to go to NBA All-Star Weekend with him to Chicago this year. And also, this is his first year being voted in the running to be voted in as an All-Star. So he's doing a little cross promotion here and promoting himself to get voted in as an All-Star. So a great thing there, doing a cross promotion. And he didn't, if you read the whole article, you'll see that the NBA wasn't, for this 100%, right? And he had to, get the lawyers involved and come at them on how he would have structured this to not only benefit himself, but benefit the NBA as well. It wasn't a scammy ICO tokenization of his contract. He came at them correct, and this is why they're allowing it. But this is not the first time, a player or a team has, tokenized a team. This happened with the Green Bay Packers, and you guys look that up and let me know what you think. All right. So yeah, let's discuss in the comment section below the whole tokenization of Dinwiddie's contract, the Illinois blockchain laws coming into effect as of January 1st, and this whole Fed keep printing more money. Smash those likes, hit that subscribe button, notification bell, share, all that good stuff. It's your boy Sergeant Crypto, and I'm out. Peace.